You know, let's see. For some reason, it just told me it didn't start recording. Hey, welcome out, everybody. Welcome out to this is a new podcast here for a podcast episode for Tax Sale Titans. Let me get this switched over here. Yeah, that's weird. I don't know why I just did that, but that could cause a problem here. But it's not recording anything for us.
Oh, my goodness. Let me see. I don't know why it's not doing that, because I just deleted seriously like 150 different past trainings. I'll see if I can figure it out as you go through the instructions. Sorry, everyone. You know, it says that our memory is full with too many trainings, but we've deleted hundreds of them now, and it keeps going that. So we're hopefully going to be recording this. I'll go back and delete a bunch of the old ones again as you go through announcements.
Interesting. All right, we'll give that our best here. But what we're going to be covering tonight, so we're going to be doing a post-sale review of some Virginia sales here. We'll be discussing land values, how we establish land values here. And then we're going to look at some other sales. There are a couple of auctions all over the country here. We're going to review one in Georgia, and then we're going to review a bad deal that we found, and we'll wrap things up with some Q&A from our members.
Yeah, absolutely. So, you know, we've got some pretty excited things that we're going to go over tonight. Hopefully we've got a recording of it because it's going to be some good things. Before we do that, we want to thank everyone that's on the call tonight. We want to thank all of our members, our coaching members, our advanced members that are at the buying tour, and even just followers of us. We appreciate you guys coming to us for tax sale information. And we definitely are trying to put out some good information to teach you guys about how to get started investing in tax liens and tax deeds.
Yeah. Now the podcast that we have here, students can access the episodes of these here on the YouTube channel.
Yeah, the podcasts are available on the YouTube channel. You know, the webinars are available, you know, through the membership on the website.
Yeah. Now, also for everybody that's on the line, this weekend we have a boot camp that is coming up here, 3-day workshop in Houston. That we would love to have you out, and any members that we have get a huge discount here off of the ticket price. So this is a full 3-day event with lunch included. We cover everything related to tax sales and also real estate adjacent. So we would love to have you out. It's a lot of time for us to cover information and to get into greater depth, and it's only $299 for members. Yeah,
would love to have you out there. And you know, what we're going to be talking about right now is we're going to be talking about a upcoming auction in Virginia, or past auctions in Virginia. So we're going to be looking at a couple of different sales that took place from 2025 to 2026, and you know, Virginia, we'll talk about here in a second, is how Virginia works.
Yeah, absolutely. Oh, by the way, don't worry about the stuff we erased. We're talking about old trainings there. We've got trainings going back many years. So yeah, we're deleting old stuff here, not new stuff. Now, Virginia is a tax deed state, so essentially meaning that that they wait out a redemption period before the county will begin the foreclosure process on the properties. They're going to have properties open up for what's owed in taxes and fees, and they use premium bidding to to sell a property. So highest bidder wins. Everything is pretty straightforward for most everything that works in Virginia. There are some counties that may have a minimum bid that's higher or require a percentage of the assessed value. We've seen that in some cases here. But what we also find, though, is that some of the counties provide current photos, at least more so for, of course, exterior. We're not getting interior photos of properties, but they do provide us with newer exterior images of properties, which can also be really handy, just because we can see the information there rather than needing to rely on online information, and we know that it is that it's current. But the other thing about Virginia is they have a lot of sales. They're smaller sales, but there are larger numbers of them, and they happen on a pretty consistent basis.
Yeah, exactly. Now, they also provide photos on most of the pieces of the land as well. So that really gives us an advantage, especially if we can't get a street view. We can see what the land looks like from where the photo was taken. And so that's one of the big advantages of Virginia. So what we're going to do now is we're going to go look at a number of different auctions that took place over about the last 3 or 4 months or so, 5 months, I guess I would say. And we're going to be looking at some commercial property. We're going to be looking at some homes, and we're going to be looking at some land that have sold recently. Let me go ahead and pull this up quick. And we're going to start with this property right here. Now, to be 100% honest with you guys, I don't know a whole lot about mobile home parks. I've been kind of interested in them, but this is one that ended up selling at the tax sale. We can see that it sold for $460,000, but it's also got a pretty good sized piece of land with it.
Yeah, in fact, what's interesting about these properties is the income potential that like a little trailer park like this has. I mean, it's part of the reason why trailer parks have always been fascinating to us, and they do come up occasionally, sometimes in tax sales. But what you essentially have, I mean, with a trailer park and a lot of units there, you have the potential to create pretty amazing income, potential there with a lot of properties, and without the same kind of costs that would need to go into it in order to have homes, renting out anywhere else or any other way.
Yeah, well, and I counted, about 60 lots there, between 50 to 60 lots. And, it's also 38 acres. So, if as we look here at the map, and it's going to include all this land there, and across the street, that's Walmart. So, we're in really a prime location. They're not utilizing all of the lots, and they have all this extra land. In fact, if we look at this here, this can kind of give us an idea of the land itself. In fact, I think there's also this map here. Which I think may give us an additional view as well. But
it's a big enough property though, with where it's located at as well. Oh, that's interesting. Where does it? Oh, it is. Oh, it doesn't have access up to the front road. It has access to that road. That's interesting.
Yeah. There's access on this road, and then there's access on this road here. So you've got these two different access points, but you can see that the trailer park itself is only all of this and all of this over here, but you have all of this land over here as well. So, we're talking at almost 40 acres. Here's Walmart. Here's all kinds of different, commercial buildings. You've also got trailer parks down here, but it's already been zoned for this. So you could really class this up if you wanted to, and provide places for people to have income type property. I mean, maybe you could even get the permits to subdivide it and sell the land individually to people that are bringing on trailers. I mean, there's just so much possibility with something like this. Yeah, they paid a lot for it. They paid $460,000, but the income potential, the land value, and we'll look at a couple things here in a second to kind of go over some of that. So, here's the Google Street View. Here's kind of where we're looking at the Google Street View of some of it.
These are October of 2024, so a couple years old, but not too bad.
Yeah, this is kind of where it comes up around here. And then over around here, I believe is, this area right here.
What are the numbers on this? Don't think I saw the numbers.
How much it sold for?
Or yeah, or even the value, or yeah, anything. I didn't see.
The value of the county was 700. It sold for 430, and that's really or 790 was the county value, I think. So I have to look again, something like that. And so I was trying to determine, what the value of it was. Did they get a good deal or not? And really, where I think that they did is because of the additional land value. So, here's one that's that's selling for 800,000. It's a 23 unit. It's not located in the same area, and this is where I don't know a ton about mobile home parks. I was trying to figure it out, but they rent out for about $415 a month, and this is a 23 unit. I can't remember the acreage on this. I think it's like 7 acres. This one just got listed on the market with 41 pads, at 2.15.
So for picking it up for, you say they got it for 200,000 or 300,000?
They got it for 460,000. I think it's worth $1 million, as is, because, also if we look at some of the land value within the area, this is 2 acres, pretty close to where this is, and they're trying to get 1.5 million. And I saw lots in here and building lots in this commercial area that was selling for quite a bit. So, I think easily could be worth $1 million, maybe more than that. And I think the potential on it could be a lot greater than that, in being creative, figuring out what you could do with it, add additional units. Maybe you could put, some type of apartments or some sixplexes or something on there. I don't know, but the fact that it's already zoned for that, and it's already got about 50 to 60 pads that you could get utilized, I think that could bring in some pretty good income.
Yeah, well, it's an interesting property because you could monetize it right now just how it is, but it does look like there's real potential there if you wanted to, to maybe subdivide the property or do further development on it, because the values are high enough that certainly with 50, so many acres there to work with, it does seem like the value would be pretty high on a property like that.
Yeah. Here's another one, and this is just a home, and I was just kind of go through quickly before we get going and try to find some that we could look at. Here it ended up selling for 74,000. They don't have a ton of information on it. We can just see kind of that photo there. Has an assessed value of 126, and so, well, let's look into the market value. And so,
yeah, it seems like a pretty good. I mean, it's so clean that for 75,000 in Virginia, that seems like a pretty good deal.
yeah, well, you can see it's it's a split level. I'm sure it can be cleaned up, but I would imagine probably built in the late 70s or 80s. Maybe a little bit newer. Not too bad of an area. I mean, it's nothing blaring here, and it's really kind of, it's not a bad looking split level either with the brick, the gray. You could replace some things on it. Here's what Redfin is valuing it, and I found some properties in the area that are selling that were similar, between 175 to about 225. They were kind of the same split level, just that were about the same size. It just depends how nice they've been rehabbed or fixed up or not.
Yeah, so at 75,000, realistically, they probably did pretty well on it. At least, they didn't pay 50% quite for it. They're probably closer to about 40%, and it's new enough that those numbers aren't too bad, and they can make 100,000 on it.
Yeah, absolutely. I mean, that's what I think. They paid 74,000. Let's say that they put 30,000 into it, and it's really nice. They could sell it for 200. Well, at that rate, you're making $80,000 to $100,000 on it, and that's a pretty good return on doing a property that's only valued at around 200,000.
Yeah, I mean, 75,000 for a property like that is it's a pretty good deal. I mean, they overpaid. They paid more for this one right here, at 91 than they did for the other one. This one's probably a lot older.
Yeah, it is quite a bit older. We can look at some of the information here. See that they have a value of 186.
Oh, but that's a big lot. Yeah,
Yeah.
22 acre lot.
Yeah, and that's where a lot of the value resides, and you can see that there's a bunch of smaller lots around it too. So we're looking at a pretty good sized lot here, pretty good piece of land.
Yeah, well, and I'll bet if it's the same county that we're dealing with, land values are pretty high, and so once again, 22 acres could have substantial value there. Some of it's been cleared too.
Yeah, some of it's currently being used as farmland. So that this is already bringing in some type of residual income. Somebody's farming that land. At least I think it looks like with everything going on there, definitely that piece was being farmed. But yeah, it has some pretty good value to it. If we look at kind of the value, here's where the home is located, and you can kind of see that it goes all back there.
Oh, that home actually looks better than it did in the county images there.
Yeah. Well, you can see that they've got a new roof. At least it's all brick. It's a little bit older home, but it's not too bad. And then, you've got all of this land. Yeah, see, you can see that that's being,
Yeah, they're growing hay there, I think.
yeah. But somebody that's looking for a more rural property, this was picked up for 91,000. Zillow is valuing it around 251. And I think it could be more valuable than that. When I was looking at some of the land that was selling in the area, there was land that was selling that were, similar size for $150,000. And so is this worth 300 more than that? It very well could be. It takes some more research to kind of getting into it. I'm just quickly looking at a few comps as I'm going through these. But
At 91 though, they did pretty well. Just like the previous case here, where they didn't even pay full 50% for it. They probably paid closer to about 40% for it. And that's not even really accounting for all the extra acreage and what that might be worth.
yeah, yeah, exactly. Well, and that's kind of where we see most of the properties top out. Occasionally we've seen some go higher than that, but a lot of them will sell about 40 cents on the dollar or less for a lot of these properties. I mean, of course, you're always going to see exceptions to that, but we could show example after example of these different types of properties where you're not getting them for free, but you're getting property there probably cheaper than you could any other means.
Yeah, without a doubt. I mean, you're not going to be able to go in there and look for foreclosures and find a deal like this where it's over 50% off. You won't find that anywhere else really, where they're willing to sell it at a price point like this. Even this one assessed at 158, it's probably kind of like some of the others here where it's valued at closer to 200 or so. And I'll bet the number's fairly similar. They probably paid about 40% for it, maybe 50%.
Yeah, you kind of see they've got that feature there. It's got a terrible noise. I don't know if you heard that when it's doing that video.
Oh, no, no, we don't hear anything.
I didn't think you did. You guys are lucky because it's hard to listen to. It sounds like they're blowing something in it, but we can see some of the details on it. So you can see that the house, their door's in pretty good shape. Obviously, it can be cleaned up, but it doesn't look too bad overall.
These all came from one sale.
No,
Oh,
these
a
are
couple of different sales.
yeah. I was just kind of like the last couple of properties when they're one sale. There's a couple properties, so I just looked at maybe 3 different auctions.
Nice. Well, and that's also, so the Virginia sales, sometimes they only have 5 properties in an auction, or, maybe 10 if it's like a bigger auction. We've seen a few that are slightly bigger than that, but they tend to be pretty small sales with less than 10 properties.
Yeah, well, one thing that I found kind of interesting
Yeah, the
is
next door neighbor.
you can see that they've got this going on. They were going through a full rehab on this property at this time.
Yeah, and that's the next door neighbor.
Yeah, and you can look that a lot of these homes are getting fixed up, cleaned up, and so it makes sense to fix a lot of these homes up. And this is very similar to this one right here. We're always going to look to see what does the roof look like, the exterior, the windows, does the door look secure? Be a little bend there, but that'd be easy to fix.
Yeah, those are pretty good opportunities there. I mean, valued at 232. Yeah, so at 90, 95,000 or whatever, they did pick it up for about that same price, about 40% of value. They did pretty well.
Yeah. Yeah, and you can kind of see that's where I think that we've got a lot of investors that are doing it, and so they're not going to go over. In fact, I was trying to find this one that we did. I think we did a deal on the day on it years ago, but we'd looked up, or a year ago, we looked it up and we could see what it sold for at the tax sale, and then it was like 3 or 4 months later, and it was all rehabbed and fixed up, and we could see what the profit margins on it. I could not find it, but it was kind of something similar to this where they picked it up for, in fact, they probably got it for closer to 30 cents on the dollar. And, they put maybe 20% of the property's value into fixing it up. So they were probably into it 50%. And, we're estimating that they were probably making about $200,000 on it.
Interesting.
But yeah, kind of another example of a decent property picked up there in Virginia. These are just a couple of cheap lots that were picked up. So there is, opportunity out there. This one was, 0.37 an acre. We've got kind of photos of it there. Sold for for $1,250. It's kind of a cabin or kind of a camping type lot, but lots look like they were valued 10 to 15, 20 grand in that area.
Yeah, that's not bad. It's pretty cheap there, $1,200, for a decent lot. That's pretty good.
Yeah, this one here sold for $500. I had to look up at the county section, but it's kind of this lot right here. Oh, that didn't work.
And that's kind of bizarre how they've got that little circle there.
Yeah, well, it's not necessarily just that circle. It comes up here like that.
Huh.
I had to look up in the record. Here's another 1.39 acres for $500. So I mean, these aren't the most sexy lots in the world, but that's not a bad 0.39 acre lot for $500.
Yeah, that's pretty cheap.
Yeah.
I didn't realize that lots were selling that cheap in Virginia.
Yeah, well, some of the times they'll do these type of lots as non-judicial sales. Sometimes they do as judicial sales, and it's the process of going through the judicial foreclosure or not. And so, in cases like these type of properties, and I don't know, this one's actually not, I don't think this is a non-judicial sell, but sometimes they'll sell them up starting at like $100 or $500 for those, and they can still be worth bidding on or buying. You're getting 100% ownership, but because there's so little records on it, they don't go through, and because it doesn't have as much value, they're not going to go through the expense of doing a full judicial foreclosure. But this is about a $10,000 to $15,000 lot here.
Yeah, that's interesting.
Now, here's just another type of lot. They paid up a little bit more for this one, but they ended up paying just over 10 grand for it. That lot right there. And, I was checking, and there's quite a bit of building going on within this area. And here's the actual lot that it pulled up, which I don't know why they're showing that high of value. Oh no, this is the comp. This is the next door comp that sold for 50,000. And then here's one that sold for 46,000 that were, really close to it. So, they paid about 10,500. It's worth about 45 to 50. You still got a pretty good profit margin. And there was seriously 50 lots like this that I looked at.
Wow. So yeah, even though they seem to pay a lot, I mean, 10,000 seems like a lot to pay. If it's valued at 50,000, then the margins are there.
Yeah. Here's another one that's ended up selling for $3 grand. It's about 0.22 acres, just under 10,000 square feet. Look at some of the photos here. And you can see it's right next to a newer home. It's located right there. And then we can go down and get the street view of it. It's that lot right there. And then here are a couple of properties that have sold within that area. This just barely sold for 27,000. Here's another one that sold for 20,000. And so, these are different comps within this area that this was picked up for $3 grand.
That's pretty good though. They probably picked it up for 10 or 15% of value.
Yeah. We'll look at one more, and I have a bunch of others, but this is enough to go through. This one ended up selling for 2,100. It's about 0.36 of an acre. Look at some of the photos. You can see it's kind of a nice big lot back here near the end. And what's kind of interesting about it is, this here is what, Redfin pulls up on it, at 149,000. Now, I don't think it's worth that. I think that, Redfin's out of its mind on that. But here are a couple of properties that have sold really, really close to it. In fact, this one, this is actually one that's for sale. And this one actually might be the one that he picked up right here for 2,100.
Yeah, those are pretty numbers then. That's 5% of value.
Well, you can see from the map, so I don't know if it's saying the 62, but 62, that's the lot. If it's 61, then that's the lot next door. So this may be them reselling it. They picked it up for, $2,100, and they're now relisting it for sale for 40 grand. So either, yeah, see, it is that lot. Let me look again. Both Signal Court. See, that Signal Court, it's either that lot or maybe it's this lot right here next to it. But either way, you've got one, you picked it up for $2,100. Here's one that sold for 32. That's very similar. Oh, it's the lot to the left of it. See, the one that's for sale is this lot here on the left, and this is this one right here on the right.
Yeah, so a $40,000 comp is a pretty good comp for it there, with it being the next door property.
Yeah, well, and this one's really close, sold for 32. So, picking it up at that price, they're probably going to do pretty well with it. But what I'll do, Shade, is I'll go ahead and pass it back. So hopefully that at least gives you guys an idea of Virginia. What we're trying to do through the podcast is expose our students, our members, of different areas that they can invest into. There's so many different opportunities, out there. And so each week we're trying to look at some different areas with both auctions that have taken place and upcoming auctions, so that we're exposing you to good areas where you guys can bid and win property. Figure out how to send it back to you, Shade.
Can you see the floating box?
Yeah, but it doesn't have that section that it usually does. Oh, there it is. Sorry, it was on the wrong side for some reason.
All right, good. Let's do this here. Current slide. Okay, good. Now we're going to this next session. Let's talk about determining land value, or the role that it plays, because land is something that we do focus on a lot with tax sales. It's because it's fairly common for it to go to tax sale. It doesn't always have a lot of competition, and sometimes there can be good potential profitability at it, like we saw with those lots there. They're picked up at about 5% of value, for around $2,000, but are valued at roughly 40,000. In order for us to be interested in a property, we always say that, property needs to have, if it's vacant land, it needs to have both use and it needs to have value. And typically one follows the other. If it has use, it tends to have value. If it has value, it's because it tends to have use. But when we say that a property needs to have value, what we're really saying is that it needs to be sellable. You can assign a certain value to any piece of property, but it doesn't necessarily mean that that's what it's going to sell for. That's what we need to know, is what the actual sellable, value of a property is. And properties that don't really have any use are difficult to sell, and also tend to not have any value because, again, they lack that use. And so it's a red flag that we see all the time, that when we look at a property there initially for an initial valuation, if the value is set too low, it's always a red flag. There's something else going on.
Yeah, absolutely. I mean, when we're talking about looking at the market value, even as we were looking at those comparables, we're getting an idea of what are properties selling for, what is our current competition, to help us determine what value is. Now, if we're looking within city limits, we try to get as close as possible. I mean, if we preferably, if we can get it within a block or two, we like to do that. Now, sometimes depending on how much real estate is being sold, we may need to expand that search. We may go to a quarter mile, half a mile if we need to. In more rural areas, we can expand that larger. So when I was looking for, some land through some of the Virginia sales that we didn't get a chance to go over because of time today, some of these were big pieces of land, 120 acres. And so you're not going to find 120 acres just right next to each other. I had to expand that out a couple of miles. But if it was the same type of property with the same type of terrain, then that could be a really good comparable.
Yeah, in fact, the comps are ultimately what are going to set the value here for the property. So we've got a usable piece of property, then it's going to be through the nearby comps that we're going to be able to set the value. And we don't just look at what's currently listed on the market. We look at the sold comps. In fact, what we like to do is we like to get an idea of exactly what's going on in a particular real estate market, and we can use fast, easy tools like Zillow to get a quick snapshot of it. We don't have to be precise. More than anything, what we care about when we look into an area is to know how many properties are currently on the market in this area and how many properties have sold in that same market over the last 12 months. That's going to tell us whether whether properties are moving there or whether it's a very slow or stagnant market. Sometimes that information alone will be enough to make us move over to a different sale or look at different properties within the auction. And so that's something we do with every property we're looking at or considering. We're trying to get an idea of what the real estate market looks like, where it's located, and then we'll look into that market deeper to find specific comps.
Yeah, absolutely. So we like to use Zillow. I really like to use Redfin as well, because Redfin has a little trick that we can show you guys where you can kind of zero in exactly on that street and start looking at comps, from that location outwards.
Yeah, in fact, we can also set the parameters there for the search to make sure that we're dealing with properties that are similar to ours. It's why we divide up properties between our vacant land and our improved properties. It's so that we can focus on similar properties there in terms of homes or in terms of land. If we're looking at property, we can set our search parameters based on size, based on price. There's a lot of things that we can do. In fact, one of the things that we do like to do is whenever we're looking at nearby properties, we like to look at them starting price-wise from low to high. So if we're looking at what's currently on the market, we like to look at that from low to high so we know what the cheapest properties are on the market that we're going to be facing. Or if we're looking at the sold properties, we like to look from low to high again because we're interested in what the market is actually doing in it. And the lower end of the price spectrum tends to be where the properties are at that we're usually trying to value. So for example, if we're looking at some of the results here, these are sold results, 920 that we're looking at, and we may be looking at, we're looking at these from low to high. And so we've got a couple of cheap transactions at $300 or $400, $1,800. These could all be tax sale transactions or something other than just a legitimate sale. So that's something else we have to kind of discount, is when we're looking at properties that are not true reflections of value. But it also tells us what the entry level is for properties within that area. And that can be important for us as we're looking at properties, because we know if the entry level is right here, we can pretty well know which properties are going to work in this area and which properties won't.
Yeah, well, and when we're looking at the comps, we're going to see, is that going to be a usable property or not? Because side lots, non-buildable lots, they're going to be sold as well. And so if we can look there and we see that's only 2,200 square feet, it needs to be 7,000 square feet to be a buildable lot. Well, that's not going to be a good comp. There's also going to be properties that have sold through tax sale, that sell because of family transactions, that could be a different dollar amount. So we're going to be looking at the cheapest. What is the actual cheapest property selling for? So there's some $100, $200, those may not be real sales. Once we get to several properties that are about the same size that have sold recently, that's where we can get a pretty good idea, about what they're selling for within the area. But we can look up in zip code, we can look up by city, we can look up by, by sold information. We can go back to 5 years on Redfin, and usually we're going to try to do it as little as possible. But sometimes when I'm looking for land, I'll have to go back, especially large pieces of land in more rural areas. Stuff like farmland, you may need to go back 2 or 3 years to be able to really get some comps. Now, we would never do that within a city or with a bunch of area, but to see, because maybe they only sell land out there, maybe there's only 20 sales over the last 3 years. But that's going to be the best way I can find a good comparable if there hasn't been a 110-acre parcel of land that hasn't sold that year.
Well, and that also tells us something about the area and what we can expect, so that we're not just looking at what the numbers of the deal are, but we're looking at what the time frame of the deal, may potentially be. If they only sell 20 properties a year, in this area, then we know that, it might take a little while for us to get that property sold, so we can factor that into the decision of whether or not is it still worth it to buy it. If it takes a year for this property to sell, is it still worth it or not? And so, yeah, all of these tools will make it so easy for us to set values and with the properties. And what's nice about it too is that we don't have to be exact with tax sales here. Really, within 10% of value, roughly, is probably good enough. Because again, we're not planning on paying full market for this property. We just need an idea of about what it's worth, so we can set our max bid as a percentage of of that estimated value. But yeah, like Steve was mentioning, there's a number of different ways that we can go into and look at specific neighborhoods on Zillow or Redfin. If you can look in at into neighborhoods and what their values are, you can kind of determine or select your own comps. In this case, if we just pull out the house number on properties, we can go into that neighborhood and see other nearby properties that are listed for sale. We can find the comps that are going to be closest to our property in proximity. And proximity is probably, along with sharing attributes, proximity is probably equally important, for setting an accurate number. The closer you are in proximity and the more characteristics your property shares, the more accurate that comp is going to be.
Yeah, definitely. The closer it is and the closer it is in size, it obviously makes sense. It's going to be a good comp. Like we talked about, what we'll do is we'll just search by the street name. So many times land's not going to have an address, like a number address before it, 532, Timber Road, but we can look up Timber Road in that city, and then what Redfin will do is it'll zoom in directly to that street. I can't get Zillow to do that, so I like to use Redfin to be able to do this. And then you can see where that star is. It'll kind of zoom me in right to that street, and then I can look and see all of the properties that have sold. I can go back and look from 3 months, 6 months, a year. I can go ahead and you can, check even. You can even break it down. When I was looking today at some of them, they had quite a few results, but I need to look for larger lots. So I had lots that was between 3 acres and 12 acres or 15 acres or something like that, where I could look up bigger size lots to help narrow that list down. So I'm looking at the closest comparables that I can find.
Yeah, which makes a big difference here. The other thing that we can use are county records. They also have their own sales tools built into them for finding comps, and sometimes they are very detailed, go back a long ways and provide a lot of records. Sometimes they might be easier to use as well. We can see the arrow in this case is pointing there. There's a featured online tools section on this property assessment, and it says comparable sales is what we can click on there. If we click on that, it's going to pull up the comparable sales feature here, and we can see properties that sold within a set radius. So within, and we can change that here, whether we're looking for for a quarter mile or a half mile or whatever the distance is. It will show us everything that sold, within that radius, within the set time period there we have.
Yeah, absolutely. This is a huge feature that we can use. In fact, last week on the podcast, we actually went and looked when we were talking about GIS maps and some of the GIS map features that are available within the counties. We went and looked at some land that was selling within an area and properties that were selling within an area and found some really good comps using a feature just like this. And this is available through the county records. I mean, it is so much easier now in many ways to be a real estate investor. Now, of course, things are going to be different. There's going to be things that may even be harder than 20 or 30 years ago. But doing research now becomes so much easier for us to be able to do by using these type of features. I mean, unless you had access to the MLS, which only realtors had access to, it was hard to find comparable properties and determine what you actually thought your property was valued. In fact, most people would just try to look and see what one of their neighbors and say it was selling for or asking. And they say, well, they were asking 230, and I think our home's nicer than theirs, so our home has to be worth 260. It was all just a guessing game, and I know this firsthand because I started as a brand new real estate agent in 1999, where people were just kind of looking and then in their head determining what the value is. Now you can just type it into Zillow or Redfin or all of these different, and at least get some type of estimate of what they think it's valued at. That wasn't something that was available when we first got started.
Oh, what's amazing about those tools too is that they go through and do this process for you automatically. So in the past, if we would have, I mean, let's say that if we weren't using one of those tools, then in order to figure out the numbers, we would probably use something like one of the county tools there, to get the information. But then we would need to figure out the averages here, just like we're doing. So comparing the sold price there and the estimated value here on properties. We could figure out the dollar per square foot the same way, but they automatically do it for us, which saves us a lot of time. In fact, I think the best thing you can do really, if you're trying to find good comps there for the area, is to pull up that property initially and check out the comps first that they're using to value the property and see how accurate you think those comps are. Are they too nice for your property, or are they good accurate numbers there? Would you say your property is in worse shape? That's one of the places there that we can catch mistakes. Maybe they're using comps that aren't the best, or that are not the most accurate, and we can use more accurate comps. But more often than not, though, the tools tend to be close, within 10% probably, and fairly safe to use. But what's nice about all this, though, is all this stuff takes tons of time. We don't have to do any of that anymore. Unless we want to do a specific comparable market analysis here, our final stage of evaluation. We're setting our max bids, we can get a pretty good idea of what those numbers are going to be within a matter of just a minute or two using some of those tools.
Yeah, absolutely. In fact, Shade, it might be kind of interesting to go on real quick. If you go to those podcast notes, there was an island lot, and it's kind of an example of a junk lot. But when we were taking up the value, this was when I was trying to see, could I find any type of value for it? It's down there underneath Virginia, and it says island lot, and then it has a couple of different links to it. But this is something that I thought was kind of interesting. It looks like it's a little community out in the Chesapeake Bay area, and I don't know if it can be used for a whole lot. But some of those other links, I have a link that'll take you to the Google map and the Redfin. But there's a community just to the left of it, and on the kind of the part of that same island. But you can kind of see that it's pretty hard to find comps and in this particular area, and you can't build on it unless you were grandfathered in.
Yeah, so there, you can't build on it then. There's no improvements. So it would only be a piece of land.
Yeah, well, and the Google map can kind of show you where it was located, but it was just kind of interesting, different lot there. They ended up paying, somebody paid $5,700 for it. Now I don't know if you could camp out there because it's a beautiful area. They've got beaches, it's really pretty, and so I don't know if it could be used for recreation or not. But that was one I couldn't find any comps. I found one $20,000 lot that sold that was kind of similar, but that was the only thing I could find in 5 years.
Oh, that is interesting. Okay, now what we're going to do now here is let's talk about another sale we've got coming up here next month. So Georgia is like Texas in that they hold sales almost every single month. And I'm not sure if the sale we're looking at here in Georgia, is this one of their normal sales on the first Tuesday, or is this one of their a separate sale?
No, this is the first Tuesday. In fact, we're going to get into here a little bit how Georgia works, because most of you guys are under the impression that it's a 12-month redemption period, and that's still the case for a lot of different types of properties. But they have a non-judicial and a judicial tax sale now, and I guess they've had this for a while. But counties, we'd only see it occasionally, like we'd see it once in a while, and so we weren't, we kind of thought it was maybe a resale. But what they're doing is, with the judicial tax deeds, they have a 60-day redemption period. And in fact, there's some things we'll talk about here in a minute. They go into it a little bit more, but we classify Georgia as a redemption deed state. In either case, you're not going to get full ownership until after that redemption period is expired.
What's kind of interesting, it seems like it's almost backwards. So the non-judicial sales have the 1 year, and you're saying the judicial sales only have a 60-day.
Yeah.
The more valuable properties, that's kind of interesting, because I would at least assume that the homes and more valuable properties tend to go through judicial sales instead. So the homes would have a 60-day redemption period instead.
Yeah, well, anything that goes through judicial sales. Some counties, and I was researching, so we knew for tonight for sure, some counties will do them both. Some counties only do non-judicial sales. So the non-judicial sale has a 12-month redemption period. At the end of the 12-month redemption period, you need to extinguish the right to redeem, which essentially is kind of like a little bit of a mini foreclosure process, so that they can't redeem, and then you'll have full ownership. With the judicial sales, they're essentially selling it after 60 days. And I don't know if this is true, but this is just what they had on their tax commissioner website. You can see down there on the bottom left-hand side, it says title will vest absolutely into the purchaser after the right of redemption. That's going to be the 60 days, eliminating the need for post-sale barment procedures and quiet title action.
That's interesting.
Yeah.
So it eliminates the need for a quiet title action, huh?
That's what it's saying. Now, I'm not going to say that that's true. I mean, that's what they're saying. Maybe you can go ahead and get a warranty deed without needing to go through quiet title if it's gone through this judicial foreclosure. So, we're just providing you the information. This isn't legal advice. I'm just telling you what they say on their website. But here on the right-hand side, that's where you can see the judicial sales and the non-judicial sales. So most of the counties, most of the way we think of it is a non-judicial sale, that 12-month redemption period. But there's more counties that are doing these judicial sales. There's counties that only do judicial sales. There's counties that only do non-judicial sales, and there's counties that do a combination of both.
Yeah, it's kind of interesting too. They talk a little bit about redemption in that part. There at the bottom, law gives the former property owner one last chance to redeem the property through the redemption process after the tax. So the delinquent owner has 60 days from the date of the tax sale to pay the registry of Henry County Superior Court the redemption amount, which is the minimum bid. Their successful bidder would then be refunded their purchase price, and the foreclosure action is dismissed. If they fail to redeem the property within the required 60 days, then within 90 days of the date of the sale, the title to the property passes to the purchaser by deed issued by the tax commissioner.
Yeah, so here in Henry County, they only do the judicial foreclosures. So it's going to depend on the county, but I thought that was kind of interesting. We actually have a lot of students from Georgia, and so there's some good opportunity there. There's tons of auctions taking place within your area. In fact, one thing that we talk to our coaching students about is called the proximity zone. And that's, picking an area, maybe it's an area that you live, really works well in areas that you live. And then you look at all of the surrounding counties that you can get to within a few-hour drive. And, you try to participate in all of those different auctions that are taking place, both through the tax sale, but also using a pre-foreclosure strategy. And, that's something that you could really do here in Georgia, in Texas, and any of these states that have multiple auctions each year.
Yeah, which that is the benefit, is being able to participate multiple times there after your first time in the first learning curve that you're going to go through. We're going to go and check out a few more. In fact, I think we're going to go and review a bad deal right now, which sometimes we find these occasionally. We find different deals that are good and bad deals. We find properties sometimes where it seems like people overpaid, but it's not that often that we find properties that we're certain people lost large amounts of money on. Sometimes, that does happen though, and that's what we're going to go and check out here today.
Oh, I must have had those slides mixed up. We were going to go check out the Georgia properties and then go and hit the bad deal.
Okay. All right, let's go and check out. So yeah, in fact, the county we're gonna go and check out here in Georgia, the pre-sale is for DelCab. I don't know if I'm saying that correctly or not. Here, let's just.
I should have looked it up before I did it. I can never say anything. DeKalb, I don't know.
Yeah.
Now, click on that Fulton County list as well, just before we get started into the auction. That'll give you an idea of what a county looks like that has both. Now, DeKalb has straight 12-month redemption period, so it's going to be, what we expect. But here you can see the properties that went through the judicial foreclosure, and then there are these houses down here, and then above that is the non-judicial. So we're looking at either 12 months or 6 months.
Yeah, and obviously you can see here that most of the non-judicials don't have full addresses. It makes sense that these are mostly pieces of land, maybe not even buildable pieces, a lot of these. And then we have all complete addresses here for what appear to be homes and apartments or condos.
Yeah, so that's what the auction looks like. Now with DeKalb, what we're going to be looking at is really, one that has the 12-month redemption period that's more standard.
Yeah. Now, one thing that is interesting about this, so it's a big list for one. In fact, I'm not even sure how many properties total are on it. Let me look here, because these are all just for.
I wasn't sure. I guessed between 150 or more, but I didn't get a chance to count them all. I think it's definitely over 100.
Yeah, that's interesting. Well, let's look at a few of the properties here, because these properties are a mix. They're kind of interesting. In looking at them, some of them are nice single-family homes. Some of them are vacant lots, vacant building lots in various places. We really don't know until we take a look at it, but we can see, the total taxes owed on each one. So let's see here. Let's take a look here.
Well, there's actually 210. I
Wow.
download the tax sale list there. In fact, if we were bidding at this auction, or if we were taking our students out there to bid at this type of an auction, we'd actually download that list and create our own Google Sheets doc that would have links back to the addresses, to the, and it would add additional things on there as well. So the first property, I think we're going to look at that Sleepy Fawn.
That's kind of a weird address. Let's see. All right, let's see where this goes here. And the amount here, so it's $12,733. I don't want Eagle. What is it? There we go.
Yeah.
Sleeping Fawn Knolls here in Decatur.
Yeah, you're going to have to take out the A, and then you'll have to add in the A when you look it up on Redfin. So it looked to me, to be some type of twin home type property. So now what we're going to do is pull up Redfin, and you can see it's valued about 76. So there's profit within there. The property may redeem. If it does redeem, you'll get 20 cents on the dollar. This isn't a property we'd go crazy for. Valued about 80 grand from kind of the comps I could see. There's one that was kind of close to it as well, where it was about a little bit lower, between 70 to 90 grand. But if you could pick it up for 15 grand, it could definitely be worth picking it up, and either acquiring the property or getting that good interest rate return on it.
Yeah, there are properties on this list where the numbers are probably better, quite a bit better. I mean, there are some properties on this list where the numbers are actually pretty good.
Yeah, in fact,
10% of value or so roughly.
Yeah, I just looked at the first couple, and then I know that you were looking at some as well, but I'm sure there's some really nice properties on this list as you get more into it.
Yeah, this one right down below it for 13,000 is in the same place. Probably a very similar value here on properties, because it's really not very far. Yeah, located at 67. So both of those are actually really similar properties. Now, let me show you here in some of the cases here. So let me go down here a little bit and let's show. So some of the properties, for example, 1921 here, White House. So this property is $6,287 is what it opens up at. Pull it up here. All right, there we go. And so we can see here is the property location. There is the address here. Let's go down to the street image. So this is February of 2025. So it's about a year old image. We can see these are all of these. I don't know if they're like kind of a duplex.
Yeah.
Or if they're individual apartments, but in any case here, you know, we can see the area here, the neighborhood. Boy, look at that. That is a house that is just a band there that probably
Is
is
that
worth a
it?
lot of money. No, it's this house. No, it's this place right here. You know, there's 1921. It's actually this
Oh
one right
yeah.
here. And let's pull up. Now it seems like, yeah, all right, so we've got Zillow pulls it up there at 105, and I think Redfin pulls it up too.
Really, that is a pretty big list.
It's, yeah,
210 properties. I mean, for a Georgia list, I mean, we're talking about Atlanta, but still.
yeah, it is a big list. So here's the same property here. You know, they've got it valued at about 154, and we could look and see which, you know, which comps which comps they're using here, which looks interesting. They do look like they're all, you know, in the same general neighborhood here area. Looking at it as a condo though, built in 72. So at $6,000 though, you're in a really safe position to buy it or to, you know, bid on it. You could obviously pay more than that on the property here. All of those are going to be a great deal, especially if it redeems. You just end up getting a good percentage on your money. But the goal here, at least, is that uh, some of these properties will result in foreclosure. But different from regular deeds, investors tend to pay a little bit less when there is going to be a time period attached to it. So it drives the prices down a little bit, means that we can get better deals. So like this one starting at 6,000, you know, this one could bid up quite a bit and still be a very safe investment. I mean, even at $15,000 or $20,000, this would be a pretty safe investment.
Yeah, well, and we've talked about pre-foreclosure strategy, but if we had the purchase the deed against the property, we might reach out to the property owner and see if we could work out a deal. We could do nothing and let them go ahead and try to figure it out on their own. But if there is an opportunity to buy it, even though you would be paying them off, which in turn would be paying yourself your 20% return, but it may make sense to be able to buy it that way, where you have a warranty deed on the property. Let's say that it's worth 150 and you pay 30 grand for it, and you contact them and you guys are able to work out a deal for 50 grand. Well, if it's worth 150 grand, and you bought it for 50 grand and gave her $10,000 or him 10,000 or $15,000 to move into the next place, and you're able to acquire the property with a warranty deed, then that's going to make a lot of sense. And for these areas where it's going through a judicial sale and there's only a 60-day redemption period, that's also going to increase the chance that you're going to get that property or you're going to get that interest rate return.
Yeah, I think they do tend to work out really well. And this list is interesting in all the different properties there. You know, sometimes you have properties that are, you know, vacant land. It's hard to tell where some of them are. Maybe you have some lots that are not valued very high. And then you have properties that are valued great and the numbers look pretty good. Like this one, the opening bid on this one's only $3,300, I think, $3,700, but it's a pretty low amount for for a house. The image is from February of 2025, and so looking at it, the house looks like it's in good shape. It's a great neighborhood. I really like everything about that that I see. And so what we can do is let's just pull it up real quick. Now the bid amount is so low for this one that I think it has an increased chance of redeeming, because obviously it's easier to come up with $3,700 than it is if it was a much larger amount. But $3,700 may be manageable. But the value of it there at 140,000 and 186,000 here, it starts at a very low percentage of value. I mean, it's starting at about 2% of value is basically what it's bidding for. And that just means there's a lot of room to bid that up, and a lot of room, to move on a property like this. And whether it redeems or not, you're gonna make a good interest rate return, or you're gonna get a chance to acquire the property in a pretty short period of time.
Yeah, Shade, why don't you click on that link with the county records search, and let's look up this property in the county records quick, just to kind of show them how it looks there in Georgia, and give them an idea of what the county records say on this property.
Yeah, let's see. So let's go back here. And now, which one of those numbers is
that the dash one?
This one?
Oh, let me look at.
Maybe just look at the top and tell me what the second and third columns are.
Okay. I had it figured out earlier. Now
Let's scroll back up here. There we go.
Sorry.
Parcel ID is the first one. Okay, so.
I looked them up earlier. Now I couldn't remember.
There we go. All right, so we've got our property right here. And single family residential here.
Is it? Let's see if it's owner occupied.
No, but yeah, yes, it is. It is
Yeah.
owner occupied. Let's see the value history here on it. So we can see, yeah, total value on it going back. Really, the last 6 years are where the property's really jumped up.
Look at that though. In 2024, they took it from 212 down to 197. And you can see over on the left-hand side all of the additional information: the appraisal history, appraisal by year, current values, detached improvements, land, map. They even have a thing for photos, permits. We'll look into the permit history, because that may tell us when the last time they maybe got a roof permit. Some of the properties had photos on them. Oh, that's the permits. Look at the photos.
Yeah, they do have some photos here of it from different years of that. They've got photos from 2016 and 2022. Oh, we've got the sales history here on, let's see. In 2007, it looks like it sold.
Yeah, with an administrative deed.
That's kind of interesting. I guess it was
Well,
had a warranty deed in 74. But yeah.
I think it very well could be given to a family member.
Oh yeah.
Or you can see it's the estate type thing.
Yeah.
I would bet that it's probably got somewhat of a clear title. We may have to research two names, in determining it. But in a property like this, the chances of you actually getting it are probably pretty low, because the opening bid is so low. If the opening bid was 30 grand, well, then that's going to be more difficult than 3 grand. And so when we're looking at different properties, that can, all of that information can tell us more about what's going to happen, or at least more likely what's going to happen. If this was at 3 grand, it's probably going to get paid off. If it's at 30 grand, we've got a better chance of acquiring the property.
Yeah, very interesting. And it is a big sale, which also means that there are a lot of properties here that are going to slip through the cracks.
Yeah,
and it just may not get, such aggressive bidding.
Before we flip over, I was wondering if we might go back and look at the auction that took place yesterday, just to look at a couple of those judicial properties, so that we can kind of show, okay, these are the properties where they had a 60 redemption day period, and you're not going to have to, you know, foreclose on their right to redeem. It was that first list we were looking at in the beginning. The Fulton County one.
Okay.
Thought maybe we could look at one or two of those down there at the bottom. Because we were looking at them yesterday, and it looked like there were some pretty nice properties. Thought it might be kind of cool to show one or two of them.
Oh yeah, we can't copy the numbers. Okay.
Oh, that's right. Sorry.
That's right. Let's see. 21 Jefferson Hill Place. Oh, what was that? There we go. And all right, here we go. So we can see that this one is actually in some type of a condo. I don't know if we actually have a street side image here of it. I don't think we do.
It doesn't look like it. Well, and something like this, you know, the one thing about a condo is we eliminate at least some of our big concerns, being roof and foundation and, you know, the outside. When it comes to the condo, the inside's pretty much all of it.
Yeah.
In fact, I was looking at one property in Virginia today, and I should have included it, but it had like, I couldn't tell if somebody put something up there. There was like all of these photos of like spiders within the place, and like, you know, like comments about
like a disgruntled
almost like it was a squat,
something.
almost like it was a squat, like the owner's putting up something to the squatter or something. I don't know what it was. You know, I shouldn't even have brought it up, but it was just, I'd never seen it. I don't know how they got that on Zillow, you know, all of this personal stuff. And it was very weird listing.
Oh, that's interesting. Well, yeah, this property has a lot of value there at 340. And oh, I guess we can't see what the opening bid amount here is on it, but certainly the value is high enough there that, you know, if the opening bid is 30,000, we're still looking at 10%. And so the numbers would work out pretty well on any of these, I think.
Yeah, well, and we could figure out what the opening bid is if we had the time. We would just go look at the tax information. So then we can see all of the delinquent taxes. That's going to give us a pretty good idea of what that opening bid amount is. But, you know, here's another example of a really nice, beautiful home that, you know, ended up selling yesterday in the tax sale auction.
Oh, weird. This thing's crashing. All right, let's try this again. No, hold on. Let's reload it here.
Oh, you can at least see it.
Oh, there we go. Yeah, we can see it now. So, yeah, a very valuable house here. And this one, yeah, this is one right here. Let's just pull up and see real quickly what we think the value on it is. And 562,000. It's a 4,100 square foot house. Let's see here. Yeah, 521 on this one. So really, it's you know, very valuable property. You know, worth about 500,000 plus.
Man, it's a big home.
Yeah, built in 2006. It's a pretty new home too. You know, so this one would be a great property to go after. It looks different.
Yeah, I think it's just the color.
Yeah, it is just the coloring on it. I think it makes it look slightly different here. But yeah, we just looked at the first two of those, and you know, I think the majority of all these properties here, the judicial foreclosure ones, are pretty nice.
Yeah, yeah. So it's something to look at. You know, there's these ones that only have the 60-day redemption period. You know, we looked at that information in Georgia that talked about that, you know, you may not need quiet title. We're going to need to talk to an attorney to figure out that for sure. But even if the process is a whole lot easier, you know, that's definitely going to be worth it for us. Now, what we're going to do is we're going to start doing each week again the bad deal review. There's just enough properties. In fact, you know, there was a few of them that we could have looked up. I even saw some in Virginia we could have done a bad deal review on. But this is one that happened in the last Los Angeles tax sale. And I think it's kind of interesting to look at because this is information that should have been somewhat obvious. But as you got into the deed history, if we was looking at easement information, this would all become more apparent that this is a property that we would just want to avoid, you know, and in fact, they ended up getting pretty aggressive in the bidding, but we'll kind of look through those details.
Oh, here we go. I've got it. All right. Let me just remove this thing first here, and let's get this full size. Okay, so here is the actual record here for the property that sold. We can see, it sold for $531,000. It opened up for $50,000, so it did bid up quite a bit. We have a location address on it though, but this is kind of the first sign of trouble right here. So, we're looking at it, and they give the land like a value of $73,000. But again, this person paid $500,000 plus, for this property. And so let's first pull it up here, and let's show everybody what it is here.
Yeah, in fact, it was actually a few years ago, but I just come across it when I was looking through some old notes again. And so we talked with some of our 3-day students about it last week. I thought this is kind of an interesting one to show, because we can see where the property owner, the person that bought it, the tax deed sale, tried to get their money back and tried to petition the county, hired an attorney to go through it, but wasn't able to. And the county essentially said, no, you bought it as is, and you got what you got.
Yeah, in fact, yeah. So we can see the property here. If we're looking at it from an overhead image, what they paid for is this area right basically along here. So it doesn't include this house, but it does include this this round thing that we see right here in this building. Now, if we go down here to the street side image on it, and my browser is struggling here. Okay, there we go. If we pull down here, so that's our property here. In fact, I think that's the precise address. Yeah, 709. Okay, so looking at that, I don't know if you can tell, from looking at that here, but yeah, you've got a major problem here, because that is not a house. That is basically like a storage shed for a water system, or for a utility. It's basically, it's like a utility building. And the issue that they have probably is the reason why the property taxes on this weren't paid in the first place was because the parties that are using it for that, like let's say the city officials, or the city, whoever it is that happened to own it at the time, can access this property through easements. So it doesn't matter if they pay the property taxes on it or not, because they can still legally be able to go in here and go up there to service that and go inside there and do that. And basically the person that bought it, they can't stop them from doing any of that stuff, because these are, it's an easement property, just like they couldn't change, the ditch out in front of their house, or decide that they were going to block it up. They can't do anything with what this property is being used for. And here's something else that Steve found when he was looking at this property here.
Not only that, but I don't even know if they have legal access to it. I don't know if they can get behind the gate or not. And so this would have all been part, obviously we can look at it, and what it is, a big water tank, and then there's, that building essentially houses things to help the water tank, and it was, kind of a water facility treatment center. And I can't remember if it's owned by the city, or I believe it's owned by the city, but they bought it through the county. And really, they shouldn't even be able to sell these type of properties. These should be automatically deeded to the city, and because they're exempt. That's the reason you saw exempt value underneath the structured property, is because it's completely exempt. But this was him trying to get the property back in 2024, and trying to have a hearing with the county, because after he bought it, he realized he spent $600,000 on a property that has absolutely no use. Now, sure, it's in a great location. It's in the Pacific Palisades, really good, nice area, but he essentially lost all of his money.
Yeah, we can see here, that your supervisors, this was to approve the recommendation of the hearing officer to not rescind the sale of the tax defaulted parcel. So they basically turned him down there to reject the offer, because I don't know why. It's not like anybody was out money, and by collecting that money, they're somehow paying it off. They just kind of robbed the guy. With him, at least, it was his own dumb fault for not doing, some basic research on the property to make sure that he knew what it was and that it was a usable piece before he dropped, that much on it. I mean, it'd be one thing if it was a bid for 20,000, but for 500,000 plus, it's a little bit crazy. But yeah, we can see here the above referenced parcel of real estate was sold in or around November 2022 by the treasurer at the auction here. Subsequently, Mr. Chad Smith for Verde Project LLC, the purchase of the property, petitioned your board to request the sale be rescinded.
Yeah. Well, and I think the county should have given him his money back, except for the opening bid amount. And that started at 50,000, it bid it up to 560,000. But these counties are ruthless, and so this is the reason why it's so important for us to do our due diligence. Or if there is liens or something like that on a property, we've negotiated with the city, and we at least have that in some type of writing form. Now, that could be an email through the county official or something, through the director saying, yes, we'll discount this after you buy it. But this is the reason why we talk about so much about researching. We talked about with our members tonight doing stage 2 due diligence, which is investor title searching. This would have all been found out if they would have looked through it.
They really are such jerks. They're like, basically the county here sold the property, to Chad Smith for 360,000. Subject properties encumbered. I wonder why they have the amounts are so different. Because they show they sold for 5 something. But yeah, essentially though, it says right here that the subject property is encumbered by a 1982 City of Los Angeles easement. Petitioner Chad Smith, the purchase of the property at the tax sale auction, now seeks to rescind the sale because he's discovered that the property is encumbered by a pre-existing easement. He asserts that the tax sale was invalid because it involved the sale of a public utility, and I think he has a point. They are just selling, public utilities. They shouldn't really have the ability to do it, but they'll do it still. So yeah, he's not getting his money back here, even though he probably really should, because it's not like he can really do anything with that utility, with that building. They're not going to let him do anything. They're just taking his money, and that's too bad. But it's also a lesson here for the rest of us to not make the same mistake. It's the same reason why utility, cell towers are not anything you're going to pursue, or anything else that seems like it is utility based.
Well, even right there, underneath our official terms, we say that, all items and condition included in the acknowledgement and terms and condition clause, where they acknowledge that they agree to such terms and conditions and expressly waive any objection, claim, or right to rescind the bid after arising, and so they failed to provide a legal basis to rescind the tax sale, and that they found that his issue of it being a public utility was unfounded.
They investigated and found themselves innocent.
Yeah, well, and I've told this story many times, but we had a couple of younger gentlemen that contacted us one time, and they had went to a training over the weekend and got all pumped up. It wasn't our training, and they went to the tax sale, and they teamed up with somebody there at the seminar, and they said, well, we can just go do this on our own. And they took that person's money, and then they went out and bought a cell tower lot, a half-acre lot with a bunch of cell towers on it, and thought they were going to be rich. And then they found out that they couldn't do anything with it, and they started just trying to call anyone they could for help. And and we ended up answering our phone, and we tried to give them some advice with it, but there's really nothing you could do at that point, because they had spent, I can't remember, it was 40,000.
Yeah, well, it's just like this sale. They cover themselves legally real well there at the beginning, so they can tell everybody, hey, this is a buyer beware. Anything that goes wrong is basically on you. And then when they conduct the sale, they've covered themselves legally from needing to rescind any of the offers. And so yeah, they won't do that, and you will end up being stuck, with the property. So it's easy enough to avoid, though. I think everybody can probably see that if you were just looking at this property, you'd have questions, right? You'd be asking yourself a lot of things, like, for instance, where did he value? Where did this $300,000 or $500,000 value come from? Because based on what the county has and what we can see, I mean, it's not there. They give it $75,000 land value, but it's just not there.
one thing to remember is that it wasn't just one bidder, it was 2 or 3 or 4. It didn't
Yeah.
give up to $540,000 by himself. He was the only one interested. It would have sold at the opening bid amount. There had to have been a number of different people that thought it was going to be a good investment. And maybe they looked at the land and said, well, these homes are selling for $2 or $3 million and they're only on, a 6,000 square foot lot. Look how big this is. We could do all these, even if we just put, 2 or 3 homes on it or whatever it is that they thought they could do in their head, without knowing the rules, automatically lost them over $500,000. And it's part of the reason why through our membership program, we're working with our students, and even through some of our YouTube videos and our podcast, we're trying to teach you what you need to do so that you don't go out and make a mistake. Can you make a ton of money in tax sales? Absolutely. Could you lose a lot of money in tax sales? Absolutely. We put out a video last year where somebody lost over $1 million by overpaying for a beach house, when they could have taken that money and got a beach house that was right next to it that was 4 times as new and 4 times the size for less than they paid for it at the tax sale.
Yeah, yeah, we really do. It's interesting to see people, make mistakes. The vast majority of them, I mean, the good news is that we have to kind of dig to look for the mistakes. It's not like they're as common as good deals are. Good deals are kind of the norm with tax sales, or at least good profitable deals. Maybe not when we say good deals, maybe they're not selling for 10% of value or a very low amount, but good deals in general are the norm for tax sales. It's pretty rare for us to find something where we know somebody's losing a large amount of money based on a mistake they made like this. It doesn't happen that much. So if you just cover basic research, and if you go through stage 1 due diligence, this would have caught stage 1 due diligence would have caught this issue with the property, and it should have. Certainly though, stage 2 and stage 3 should have caught the issue as well, because you should have realized, that it wasn't a standard property that didn't have any comps. There would have been a lot of red flags.
Yeah, well, and we don't see it as much with our students, but there's all kinds of properties that get purchased at tax sales, non-buildable lots that people bid up thinking that they're buildable lots. Structured properties that they haven't done on-site evaluations with, and that are in such bad condition that they're really buying a negative asset, not looking at government liens. We've seen properties that have hundreds of thousands of dollars of government liens against them. And so, there's all of these different risks out there that could be on a tax sale property. And we just need to make sure before we put out our money and bid on them that we've made sure that none of these things are going to apply, or if they do apply, we've worked that into our cost.
Yeah, which is why we have the systems that we have for doing research. It's such an important part of the process, and we need to discover any of those potential risks, while we're in that process. So if you stick through, you stick to the regular steps in research, which we basically do the same thing every time we run through and evaluate properties, you're going to find the issues that come up, and you're going to avoid making big mistakes.
Yeah, definitely. So we appreciate you guys watching the video. We'll be putting out a replay of it. And if there's a state that you'd like us to cover in the future, if there's an area that you'd like to talk to, a topic that you'd like us to talk about, go ahead and let us know, and we'll maybe include that in one of our upcoming podcasts.
Yeah, we'd be happy to do it. Well, thank you everybody for joining us this evening. Thank you so much. Becky, Rama, everybody, we really do appreciate having you. We will be back again here next week, and we'll be looking forward to seeing you.
Yep, thanks again, everyone.